Hey guys, this is my first live session. First of all, I'll introduce myself. My name is Vijay Kedia. I'm a CA by profession, and I've been working in finance and technology field since last 20 years. And I recently started my YouTube channel because I was helping my colleagues in personal finance related areas such as tax, investing, and other related queries. So, and I was always suggested to have one channel of my own, and that's where I am. So, like, I recently started this channel, and since the tax season is going on, uh, I started uh, with some tax related queries. I recently uploaded one video as well on how to fill Schedule FA and Schedule AL, which is confusing for a few people. And yeah, so I'll probably start with some of the questions I get frequently until I have questions from people uh, who join this live session. So first of all, yeah, as you all know, the tax filing due date is 31st July for personal income tax, and on which ITR type to select. Uh, I already made a short on this topic. So if you have income less than 50 lakhs, you don't own more than one house, you don't have any capital gain from from sale of shares or properties, and if you don't have any foreign asset or a foreign income, then you can go ahead and file ITR one. Else you need to file ITR two. And in case if you are involved in any business, or you are uh, partner in a firm, or you do a intraday trading, in that case you need to file ITR 3. So with that, I'll probably take some questions now. So I think first question is from Prashant. Can we list RSUs vested in 21-22 which got missed in previous ITRs in the current ITR schedule? So yeah, when you're declaring your foreign assets and RSU, like the restricted stock units, the foreign stocks are also considered as foreign stocks. So it's mandatory to declare it in your ITR 2 or 3 whenever if you are holding any stocks in a foreign stocks in a previous year. So if you have not filed it earlier, you should still go ahead and file it for the current year onwards, so that you don't remain uncompliant on this part. So if you miss for 1 year, but from next year you start filing and for the subsequent years, I think that should not be issued. So it's always good to go ahead and make yourself compliant and start filing your details of your foreign assets, which include RSUs, foreign stocks. Okay, next question is on the tax regime. So, which tax regime should we select? So, in the tax regime, I have made it like a thumb rule. So, if you're not claiming, if your income is more than 15 lakhs, and if you're not claiming any uh, deductions more than 3 lakh 75,000, then you should claim, like you should file under old, like the new tax regime. But if your income is more than 15 lakhs and you are claiming deduction more than 3 lakh 75,000, then probably you can still select the old regime. The reason is, like, for example, in the old regime, you get a deduction under ATC for 1.5 lakhs for your investments. And also there is an additional deduction of 50,000 under ATCCD for your NPS investments up to 50,000. So total you can claim like 2 lakh of credit for investments. But say if you also have a house rent or a housing loan, and for that you are getting additional deduction of 2 lakhs, which is like, so 2 lakhs plus 2 lakhs under ATC and ATCCD, you are getting 4 lakhs. So in that case, since it's more than 3,75,000, it makes sense to go with the old regime. But for example, in my case, I don't have a house loan, but my and the rent which I am paying is claimed by my wife in her mm, ITR. So I don't have a house loan to claim. I don't have a house rent to claim. So in my case, the if I go for old regime, that I can claim only deduction up to 2 lakhs, and which is much less than 3,75,000. So what I do is I select new tax regime, and that's more beneficial for you. So you need to check like whether your deductions including ATC plus your housing loan and house rent, whether it's exceeding 3.75 lakhs or not. If it's exceeding, go with the old regime. If it's less than that, it's better that you select the new regime. Hope that answers your queries. Okay, what's the next question? So what if I sell my vested RSUs from Amazon, on which tax has already been deducted during vesting? So, yeah, so Akanksha, right? Okay. So, if we sell during the, so when you get your RSUs or the stocks from your company, that time the tax is already deducted. So you have paid tax on that, and you got those shares in your account. But later on, when you sell those shares, you become like it may you may get a capital gain on that. For example, when the shares were vested, that time share price was say $100, and then later on when you're selling, that price is 110 or $120. So that additional $20 is your capital gain, and you need to calculate your tax on that capital gain. So, and in case of foreign stocks, if you are holding for less than 2 years, so if you are selling within 2 years of vesting, then it's a short-term capital gain. So, whatever gain you are getting, the difference between vesting price and sale price, that will be treated as a short-term capital gain, right? So you need to add that to your income. So say if you are in 30% slab, and then that income will be taxed at the rate of 30%. But if you are selling after 2 years, so you say you got some stock vested on July 24, and you're selling after July 26, maybe in August 26 or after that. In that case, it's a long-term capital gain. So there the tax rate is slightly lower. So whatever, so first you need to calculate the capital gain applying the indexation. Probably I'll cover that indexation in my later videos. So indexation is where it's called cost inflation index. So if you're holding an asset for more than 2 years, foreign stocks or properties, you get the benefit of indexation. So you take your old cost, you apply it by, you multiply it with that cost inflation index ratio. So what will happen is, so for example, you purchase for 100, but in 2 years with that inflation, that 100 might be considered as your cost might be considered as 114, and if you're selling for 120, then only $6, right? That will be considered as your capital gain, not that entire 20. So that's the benefit of indexation. If you hold for more than 2 years, and then you get the capital gain. But in less than 2 years, whatever is the difference, the total amount is taxed as per your slab. So that's the difference. So it can have long-term capital gain, it can have short-term capital gain. It may also have loss. For example, if you're selling for price less than what you got it for. So, for example, you got it for 100, but you're selling it for 90 somehow, because we saw that in like in 21, 22, like when the share price had fallen. So, if that happens, then you also might have a long-term capital gain or loss depending on your holding period. So, in that case, you can adjust it with your other gains. So if your long-term capital gain, you can adjust a long-term capital loss, you can adjust with long-term capital gain. If you have short-term capital loss, you can have adjust with short-term capital gain. And if you're not able to adjust that, you can carry forward it to up to 7-8 years, so that you can adjust it with your future capital gains. So that option you have. But yeah, normally you'll have capital gains, and you need to pay taxes as per whether it's short-term or long-term. Okay, so I'll take the next one. Uh, Ranjit, while calculating the cost in dollar column for Schedule FA, do we calculate the price at grant or price at vest? Yeah, you need to consider the price at vest because when shares might be granted much uh, in advance. So, for example, when you join, the companies might allocate you, grant you some shares, but you will get it at the time maybe after 2 years of joining the company. So in that case, you need to, and the tax is also deducted at the price based on the price on the vesting date, right? So for all tax calculation purpose, your grant date and price on the date of grant is not relevant. So whenever the shares get vested, that time whatever is the price, on that price itself the tax will be calculated, right? And that price will be considered as cost in future when you're going to sell those shares, right? So it's always the vesting price. Okay, Nisha is asking, please explain EPF new tax rule related to tax, probably with an example, especially the one related to tax on interest on employee contributions above 2.5 lakhs. So yeah, no, that's a good question. So yeah, so earlier there was no limit on the amount which you can contribute in employees provident fund. So for example, companies deducting like 12% from your basic, and then companies also contributing the similar amount in your EPF account. But say if you are so earlier, it like till 2 years back, you were allowed to contribute any additional amount in the EPF. So say you are 12% is getting deducted, you can contribute up to 100% of basic. So that was allowed. So for example, my basic is say 1 lakh and 12,000 was getting deducted, but I was allowed to increase my contribution till 1 lakh. So I could have deposited additional 88,000 in that PF. But now, if you say if you contribute 1 lakh every month, that for 12 months it will be like 12 lakhs. But now, if you do that, what government is saying that below, if whatever amount you are contributing more than 2.5 lakhs, on that interest, you need to pay tax. So you can still contribute. There is no restriction on contribution. But what government is saying is, say in PF they pay you very like a higher tax rate considering the risk. So you get more than 8% on EPF, and that's tax free, right? So if you consider pre-tax, it's more than like 11% kind of return, and it's there is no risk virtually because it's guaranteed by the government. So it's a very good return for a debt kind of investment. So government is saying that we cannot give you like the unlimited advantage of EPF. So we'll restrict it by 2.5 lakh. Your employer can contribute till 12%, and that 12% can be higher than 2.5 lakh. There is no issue. But if you want to contribute from your side, and if it's more than 2.5 lakh on that additional amount, you will whatever interest you're getting, you need to pay tax on that. And you don't need to calculate it yourself. If you go to EPF website, it shows you that okay, out of your contribution, this is the contribution which is additional, like over and above 2.5 lakhs, and this is the additional interest amount. So if you check the when the interest gets credited, what is the additional amount which is contributed from your side, and what is the interest, that interest amount only you need to add in your ITR as a income from other sources as an interest income, and that will be taxed. So that's it. But whatever employer is contributing and you are contributing till 2.5 lakhs, on that whatever interest you are getting is not taxable. So hope that helps. Okay, while filling up Schedule FA, I have mentioned the details of stocks vested from 22 to 23. While filling it up for the next year, do I again need to mention them or only the vested stock in year 24? So yeah, Pranjit, so you need to mention all your stocks which are there in your account in the previous year. For example, now we are in 24, and if you have stocks in your account uh, which were there in your account in 2024, right? So that stock might be from a previous vesting. You might have got that stock in 21, 22, or 24. But since you were holding those stocks in 24, even though you sold within the year 24, but anytime during the year 24, if you had those stocks, then you need to show when you acquired it. You might have acquired it in 21, 22, 23, right? Or 24. And then what was the, and then when you calculate what is the, so your cost of acquisition will change depending on when you got those shares, but your peak value. So you need to take the peak value for the shares in 24, not for the previous year. So for all those vestings, you need to mention what was the peak value in 24, and then what was the closing value on the like 31st December, or I think it's for last year, the last working day was 29th December. So on that date, whatever was your closing value, that you need to mention. So that peak value and closing value is going to remain same for all your vesting, but your cost for those individual vesting will differ depending on when you acquired it. So that's going to be different for each vesting, but your peak and closing value will remain same. So hope that helps. Okay, yes, those comes automatically next year. Initial pre-value field. You need to pick up closing value of those assessment. Okay. Uh, if anything extra, okay. Those who hold RSU, they need to file ITR 1 or ITR 2 when their total income is less. I think you mean less than 50 lakhs. It's showing more than 50 lakhs, but okay. So yeah. So one thing I wanted to clarify: the Schedule FA and Schedule AL, they are like totally different. Maybe some people get confused. So FA is Schedule of Foreign Assets, right? And that is applicable irrespective of your income. So even if your income is less than 50 lakhs, like 20 lakhs, 30 lakhs, 40 lakhs, doesn't matter. But if you're holding any foreign assets, right, mostly it will be like your foreign stocks, company RSUs, or a foreign bank account. In that case, you need to file Schedule AL. So that is irrespective of your income level, because the only criteria to file that schedule is that you should have a foreign asset or a foreign income, right? But in case of Schedule AL, which is assets and liabilities, that is applicable when your income, taxable income. So for example, your income might be 55 lakhs, but after some deductions, if it's coming less than 50 lakhs, the Schedule AL might not be applicable. But yeah, if its taxable income is more than 50 lakhs, then you need to file Schedule AL. So that's one difference. So Schedule AL is assets and liabilities is based on your income level, and Schedule FA, foreign assets, is depending on whether you hold foreign assets or not. So both are like independent. Okay. And so yeah, hope that answers your query. And one more thing we to note here is that in Schedule FA, you show assets as per your foreign country's calendar. So in our case, so say if you are holding US stocks, then US calendar is January to December. So you need to show the detail of assets only till 31st December of the last year, right? Because you need to follow, for foreign assets, you need to follow the calendar of the foreign country. But in case of Schedule AL, which is like irrespective of your foreign assets, you need to follow our normal financial calendar, which you follow for your tax requirement, which is like till 31st March you need to show. So that's also one major difference, like between Schedule FA and Schedule AL. Okay. Uh, okay. I think there was some more questions which I got offline. I'll also try to answer that. Uh, so yeah, I think capital. Uh, okay, there's a question from Panjit. While filling up ITR, the government website showed that advance tax was due, but when filing it up, third-party website like ClearTax, they didn't show if there is any advance tax was due. Why? Uh, Okay, I think while filing, it will not show advanced tax, because it will show the tax due. Okay, so there is a difference between the tax which you pay at the time of tax filing. So, for example, if you like your whatever tax is there on your salary, that is deducted by your employer. That's fine. So normally you will not have any shortfall there. But say if you're doing your like you had your own investments, right? So maybe in Indian stocks, or if you have bank interest, you might have FDs, right? You might have some other income, right? So that part you need to calculate yourself, right? That okay, apart from this, like my salary income, what are the additional incomes I'm getting? It might be a passive income like a bank interest, or a right, or some other type of interest, or it might be like if some due to some active trading, or capital gains due to your purchase and sale of shares, or sometimes you might have like sold some house, or or a land, right? So those things, you it's your responsibility to calculate, because your employer is not aware and they are not involved in that. So, and if you don't and for that, many people are not aware that whenever you have an income during the financial year, you need to pay tax for that income in that in that quarter itself. So I'll give you an example. For example, this is July, right? So I sold some share. I got some capital gains, like short-term capital gain. So maybe 10,000, and on that 10,000, the 15% tax for the equity is like I need to pay 1,500. That 1,500 needs to be paid in this quarter itself, which is so this quarter is July, August, September. So this is the like second quarter for this financial year. So I need to pay the tax for if I have some income till 15 September. I need to pay that tax by 15 September itself. Okay. Similarly, if I have any incoming Q3, I sold something in October, like, or I had some income capital gain in October. You need to pay tax on that by 15 December. Many people are not aware of that, because you need to calculate it yourself. You need to make sure that you are paying before that due date. If you don't do that, there is a tax. There is a separate section to in income tax to calculate tax on that, which is section 234 ABC. So it'll when you file your ITR, right? It'll ask you to show that okay, you got capital gain, in which quarter you got the capital gain, if you got dividend income, in which quarter you got, if you and then it'll calculate the interest on that if the tax was not paid in that quarter itself. So sometimes if you file your ITR, and if you see that there is a shortfall, you are paying tax, you will also see there is an interest component getting added. So it's calculated automatically, added to your ITR. So it's always advisable that whenever you are getting some additional income, first thing, think about tax, and then either you, if you are aware, calculate yourself, or take help of some CA or somebody who is aware of that, and then pay that taxes by the due date of that quarter itself, just to avoid the additional taxes on that, additional interest on that tax. Okay. Okay. On doing sell for taxes option, 30% shares sold for tax liability in approx similar TDS gets deducted in payslip when the shares are deducted by hefty TDS. Okay, so Mehul, there is no double taxation here. Like when you're getting shares from your company and you select sell for taxes, uh, the say you're in 30% slab, and the 30% it'll actually be 31.2, because 4% surcharge will be there. So that 31.2% will be deducted from your share. So if, for example, if you're getting 100, right, 31 point, so they cannot sell 31.2 if you're not selected fraction. Probably they'll sell 32 shares, or if you're selected fractional, they'll sell 31.2, and you'll get remaining shares in your account. So that part is closed, but you also need to, like, the employer need to show that in your payslip also, right? That hey, you got, say, for 100 shares, the price was maybe $10,000. I don't know. Okay, and then for that $10,000, you already paid taxes of $3,120, right? And in Indian rupees, right? So they need to show that okay, you got total of 10,000, like maybe that 8.4 lakhs, and then the taxes of that 3,200 got deducted, and it's paid to the government. So that detail will be shown up in your payslip. There is no double taxation, right? It's not that your tax is getting deducted twice. Your tax is deducted while you're getting vested, and you get the remaining shares, right? But in the payslip, they need to show the full value of the shares which was allocated or vested in that period, and whatever tax got deducted by selling your shares, that will be shown as a tax paid, right? So it's just a declaration of the income which accrued to you in form of shares and the tax which employer has deducted, right? So there is no double taxation here. Just I wanted to clarify. Tax is deducted only once, but it will show up in your pay slip and at the year and in your form 16 also, so that you can file your taxes correctly. Yeah. So okay, I have not sold redeem any investment, but only holding FD RD. Do I still need to pay advance tax? Okay, so if you are holding just say fixed deposits or recurring deposits and you are getting just an interest income, uh, if it's a very small amount, I'm not aware of like how much is your FD or RD, but what I would suggest is if it's significant, right? So, and significant again, it might be different for different people, but if you are getting say 5,000 or 10,000 kind of interest every quarter, right? Minimum. Then the tax on that will be like 1,500 or 2,000 kind of tax liability will be there in every quarter. In that case, it makes sense to go ahead and pay that in advance. But yeah, if it's a very small amount, maybe 500 or 1,000, on that tax might be 200-300 every quarter, right? So it's okay. There will still be tax calculated, like interest calculated on that additional amount, but it will be like a very small amount. So it will not matter. But whenever you are, if your income, like the passive income or non-salary income, is on the higher side or has some significant amount, it's always advisable to calculate tax on that and pay it as per advance payment deadline. Okay. Again from Nisha, for dividend coming from foreign stock, do we need to show the entire dividend amount and not the one came after 25% withholding? Is my understanding correct? And we can claim the relief later. Yes, Nisha, this is correct. So if you are getting, yeah, Amazon normally doesn't pay dividend, but yeah, if you have other foreign stocks which are paying you dividend, then you need to show that entire dividend amount, not the tax deducted amount. So the entire dividend amount as your income, right? And then you can claim double taxation relief for the since you need to pay tax on that dividend in India, and there is already some tax deducted, like the foreign tax deducted on that dividend. So what you need to do is you show that total amount as your income in your ITR, and whatever tax was deducted, foreign tax, you can claim that as a relief under section 89. So section 89 gives you a relief from double taxation. So and then how much relief you will get, whether you can claim credit of that entire tax paid, or it might be less than that, right? It will depend on country, it will depend on your tax scenario, but yeah, you can always claim that relief under section 89 if you have a foreign tax paid and you are also liable to pay tax in India. So hope that helps. So yeah, you are right. You can claim that as a tax relief and then show that entire amount. Okay. uh, okay, I think this was like that's all I wanted to cover. I just wanted to do this live session for 30 minutes to cover your queries. Uh, and I already made a separate video on Schedule FA and Schedule AL, which is there on my channel. So you can also refer to that if you have some specific queries related to that. And one request. So right now, I'm making videos related to tax because it's a tax filing season and till 31st. So, but in future, I would also like to cover other areas of personal finance because tax is just a small portion of that. So it's mostly around like how do you invest, how do you create wealth, right? How do you pursue fire, right? Which I'm very passionate about, which is financial independence, retire early. So we will create more videos around that, and then it'll definitely help you in your personal finance journey. So one request from all of you, please like this video and the other videos on my channel if you like my work, and then also subscribe. Ask your friends and colleagues to subscribe. It'll encourage me to create more such videos. And yeah, if you have any questions, queries which you want me to cover, always put that in comments, and I'll try to take up that. So in future, I'll also try to come up with more such topics. And so, as I said, right now it's mostly around tax, but I want to cover a broad spectrum of topics going forward. So please do subscribe, right? And I'm sure it'll be like helpful. I'll be able to share my experience because I started my financial journey long back, and then uh, I have some lessons which I've learned. I'm not claiming to be an expert, but I definitely have some experiences which I can share and which would be helpful to you. So please support in this. So thank you. Thanks for your support. And I think there's one more question from Gyanendra. I'll probably take that before closing this one. So I've opted for two-wheeler exemption while selecting the compensation plan. Can I claim that amount while filing the ITR? Uh, I'm sorry, Gyanendra, I'm not aware about what two-wheeler exemption you're talking about, because there is no such exemption available in the ITR, because now all salary related deductions are clubbed into standard deduction. But probably, yeah, we can connect offline if you provide more details around that. Okay. So yeah, thanks everyone. Thanks for joining. Hope you share this with your friends, and help me increase my subscription, and so I'll come up with more videos around this on future. Thank you. Have a good day. Thank you.